Did you guys get your free money from Moomoo yet? If not, use my link down below. Deposit at least $100, and just like that, you get up to 5 free stocks, each up to $3,500, and you have a chance at a free share of Twitter. Again, use that link down below. And now, cheers. Let's get right into the video. So as you guys saw today, the markets were an absolute freaking bloodbath, and they actually got worse. Yeah, I think they did get worse, right? Yeah, they got worse from where I filmed my video earlier today, and this video is kind of going to build on what we talked about in that video. So the Russell ended up closing down 4.2%. The NASDAQ went down 4% on the day. We had SPY close down 3.2%, as we had the Dow pretty much close down 2%, and the VIX went up a whopping 15%. And you guys can see here, the VIX is now trading at the upper end of where it's been trading at over the past couple of months. You guys can see the VIX has pretty much peaked out at about 35 to 38-ish, over the past couple of months, as we have tested that level once, twice, 3, 4, 5, and now it's the 6th time as we're back up again, like I said, into the mid-30s on the VIX. So we got to break down what's going on in these markets. We'll talk about some stocks, earnings, all that good stuff. So sit back, relax. Again, cheers, guys. Hit the like button, subscribe, and let's get right into this video. So like I mentioned in my previous video, and again, like I said earlier in this video, we're going to build on that, right? I think in the short term here, we are overdue for some sort of relief rally. And I'm not going to just keep repeating myself, but I do believe that we are oversold. We're pretty much at that point of peak fear. I mean, not extreme peak fear, but I mean, come on, let's be honest. Have you guys seen that greed? What's that greed scale called? Is that, I forget what that what website that's on, but it kind of shows you where the markets are at, whether it's not fearful, very fearful. We're pretty much on that very fearful side right now, guys. And you know how things work. They're not straight in a straight line to the downside or straight up. Markets, when they're moving down, we get mini relief rallies. In bear markets, whenever we're in a bear market, which right now we are, we get these rallies to the point where we're like, oh, wait, is this the rally that's going to get us to the previous all-time highs, right? And usually in a bear market, the rallies don't go to the previous highs. In fact, we hit lower high after lower high after lower high until the market eventually bottoms, which I'm not calling a bottom, guys. All I'm saying is in the very short term, we're oversold. And I think we're going to get some sort of rally. I think SPY could crack back over 400, start making a move back to 415, 420. And I could completely be wrong, right? And remember what I just said. In bear markets, the rallies we see fail to break out of the previous high. So if we saw a rally on SPY, it went to 420, 415, maybe a little bit higher. Notice how that is lower from the rally we saw last time, or the high from the rally we saw last time, which that rally peaked at about 460, which was lower from the previous high, which happened to be the all-time high. So you guys get what I'm saying, right? I think SPY, we're going to get some sort of rally. Who knows when it's going to start, and who knows where it's going to go, and nobody knows how long it's going to last, but that's what I'm thinking right now, and we'll see what happens from there. And literally everything I just said, guys, applies to Triple Q, right? This is very oversold, bottom of the channel, yada, yada, yada. I think it's way too beaten down. It's down 20% in just the past month, guys. I'm not even kidding. In just the past month, a little bit over a month, but still roughly a month, it is down 20%. And it was already down, 10%, roughly 8, 9, 10% leading into the month of April. So I think we're going to get a snapback. I could be wrong. Let me know your thoughts in the comments. As always, smash that like button if you haven't done so already, and make sure to subscribe. And there goes Siri. Shut up. I'm not talking to you, Siri. I freaking hate this thing. I gotta turn that option off, or that setting off. Honestly, I'm just gonna take the watch off because I know it's gonna do it again. Either way, guys, that's what I'm thinking. Let me know your thoughts in the comments. Again, smash that like button and make sure to subscribe if you haven't done so already. And let's talk about some of these stocks that reported earnings. And the first one here, I already saw their earnings, guys. They were abysmal. It's Upstart. Let's pull it up. UPST. Upstart is down. Oh my goodness, guys, this is bad. Very bad. Upstart closed at $77 today. It went down 8% on the day, so it already got clobbered on the day. And now after hours, again, it closed at $77. Now it's at $45 a share. I mean, come on, guys. Oh my goodness. It is down another 41%. won 42% after the bell. Oh, geez Louise, guys. That means it literally has gone down 50% pretty much just today. Because earlier in the day, we got to about 85 a share. Now we're at 44 a share. Pretty much a cut in half in one day. In one day, this stock, less than a day. I mean, we're talking 8 hours, not even, 8-9 hours, it has cut in half. So Upstart reported EPS of 61 cents versus 51 cents, estimated revenue of $310 million versus $300 million. So they're actually, in terms of that past quarter, they actually double beat. They beat EPS, they beat revenue, but like I've been saying ad nauseum here on this channel, guys, when growth stocks miss on, guidance, which we'll get into here in a second, when they miss on guidance, the stocks collapse, right? The stocks collapse. Not all the time, and not every stock collapses the same amount, but when they miss on guidance after crushing it quarter after quarter, they've been doing well. This is what happens. The Upstart sees Q2 sales of 295 to 305 million versus the 335 million estimate. So that is a roughly a 10% miss on Q2 sales guidance. Full year 22 sales guidance is 1.25 billion versus 1.4 billion estimated. So very weak sales guidance for the full year and for the next quarter. And that's pretty much what I'm seeing. The stock's getting destroyed. It's a falling knife. I would not touch this thing with a 10-foot pole. Who knows where the bottom is? At this point, the stock's down 90%. 90% from $400 to $44. And mind you, it was $400 just in October, guys. That was not that long ago. It's down 90% in just that little time period. And based on these all-time highs, when did this company go public? Was it 2019 or was it 2020? I don't even know. I guess 2020. Based on this chart, it is pretty much almost right back to where it was when it went public. Isn't that crazy how these markets work, guys? Isn't that crazy? This stock went from $22 to 400. Now it's at 40, and in a snap of a finger, it could be right back to 20, guys. Which again is where it's the low. It's the low of this stock chart here on this all-time chart. So very crazy, very very crazy. That goes to show if you're up wildly on a stock that's speculative, take your freaking profits. Take your profits while you are on the roller coaster ride, while you're near the top or climbing up. You don't want to start selling or get in a situation where you rode it all the way to the top, you didn't sell anything, now the stock's crashing, and you want to hold on because you think it's going to recover, but it never recovers. Then you rode it up, rode it down. Don't be scared to sell out of a stock. Well, I guess it's too late because no stocks are really moving up like this anymore, but take this as a future lesson. Don't be scared to sell when you're up a lot, when there's a lot of euphoria, which, let's be honest, we lived through a euphoric market. Now we're getting back to reality. When there's euphoria, sell. I mean, I'm not saying sell out of your 401k or sell everything. I'm saying if you're in speculative stocks, don't be scared to take some profits, or at least take your initial investment out and play with the house money, right? So Upstart, we're watching that one, even though it's horribly performing horribly right now. Duke is another one, DUK. They did EPS of $1.30 versus $1.33, so they missed on EPS, but revenue, guys, $7.13 billion versus $6.37 billion. They destroyed the revenue estimate, and they reaffirmed full year 22 guidance, which I guess they gave that out in the previous quarter, so they reaffirmed that. And this stock chart looks pretty dang good to me. Very, very good compared to what we just saw with Upstart. We're noticing we're at the bottom of the uptrending channel. We're holding the 180 SMA. In fact, we have been these past couple of days, and now the stock today only went down 0.5%, which you guys know that is very good considering all the indexes went down 3 to 4%. So Duke held up nicely. The uptrend's holding nicely. Now all we have to do is break 112, 113. That is right by the 50 SMA here on the 4-hour chart. So I'm going to set my alert at $112. Mark is at or above. We'll see if it breaks that 180 again. I messed it up again. The 50 SMA, this green trend line, right, guys? If we break the green trend line, we could take the highs out. I truly believe that with this one, as it's been doing very well. It's been performing very well in the midst of this bear market. So keep your eyes on Duke, and mind you guys, this is not a sexy stock. It is a utility company. You probably don't know much about those. If you're a newer investor, maybe you're just into hype stocks, I don't know. You might not know what Duke Energy is. And if you don't, honestly, just do some research. It might be worth diving deeper into it. So Duke, I like. Tyson Foods is another one which did very well today. Look at this, guys. Tyson Foods went up 2.2% on the day, up over $2 on the day, and they reported earnings. And let me see here what they did in terms of earnings. They ended up doing $2.29 EPS versus $1.88 estimated, revenue of $13.12 billion versus $12.84 billion estimated. So they actually did a double beat. They beat nicely on both EPS and revenue, and they see full year 22 revenue of around $52 to $54 billion versus $51.79. So they're guiding up for full year 22. And when it comes to pork, chicken, beef, which is their products, right, guys, they are going up in price like crazy because of inflation. And Tyson Foods has the pricing power, right? They are very well positioned, let's put it that way, to do well during this inflationary time period, hence why the stock's doing well today. It's up 2%. They reported good numbers, and look at these crazy price increases when it comes to beef, chicken, pork, right? Beef volume is up 0.6% in Q2, okay, with the average price change up 24%. That's crazy, right? A huge price change to the upside. Chicken volume up 0.6%, average price change up 14.4%. That's big, right? Pork volume is actually down about 5%. Average price up, though, 11%. So the inflation we're seeing in meat products is unbelievable right now, and it's just the reality of the matter. And Tyson, boom, they offset the charge, and or they offset the inflation by passing the inflation on to its consumers. So this is one that's been doing very well over the past couple of months. It's gone from $74 to $100, and actually we're noticing a double top here at about $100. And the stock, like I said, went up 2% on the day on a great report. So we'll see if it starts breaking out of these moving averages, or the 50 moving average rather, which it hasn't done so yet. But if it starts cracking above 94, which is where my alert is, this, in my opinion, $100. It's going there. It's right there, guys. So Tyson Foods, I like it in the short term. Again, it's kind of not the sexiest company along with Duke, but they have been performing. Charts don't lie. Numbers don't lie. And the proof's in the pudding. Just look at the chart, guys. So the next one here is Blink. Let's pop this up. They reported they did EPS of negative 36 cents versus negative 41. So they beat on EPS and they destroyed revenue. Jesus, guys, $9.8 million. So they're not making a lot of money on the top line, right? $9 million. I mean, come on, guys. There's people that make more than that. I for sure do not make more than that. Nothing near close to that point, but there's people out there, it's crazy, that do make $9 million a year, and that's what Blink is doing in a quarter. And honestly, there's people that make $9 million in a quarter, which again is what Blink just reported, and the estimate on that was 6.87. So they destroyed the revenue estimate, and I want to see what is Blink's market cap. It's got to be like 200 million, something really tiny, right? No, 600 million. All right, 661 million. And let's say they do 10 mil a quarter. Okay, we'll give them some props there, or a little bit of leeway. Let's say 10 mil a quarter times 4, that's 40 million. 660 divided by 40. What's that price of sales, guys? That's pretty high. I'm not going to lie. That is a pretty high price of sales. So this company arguably is overvalued still, and there could be a lot more downside. If this bear market gets more vicious, it lasts another year, which it could, 6 months even, heck, even 3 months, guys. If this market continues bleeding red, there could be a decent more, there could be some more downside for Blink. I mean, think about it. It's a $660 million market cap. That's a lot of freaking money, and they only made $9 million this past quarter on the top line. Now, they're growing heavily. They might grow into that valuation, but as of now, it's just a little overvalued, way overvalued in my opinion. And the chart looks like crap, so I'm not looking at it from a trading perspective or from a long-term perspective on that little napkin math that I just did. Just look at that price of sales. What is it, like a 20 or 30? I mean, that is freaking unbelievable. So watch out for Blink charging. Plug is another one. Let's pull Plug up. Plug Power just reported, and oh my goodness, this thing is free falling. It closed at 1660, down 14% on the day. Now after the bell, it is down to 1550, down another 7%. It actually got down even more than that, but now it's recovering. So let's see what they did. They did negative 27 cents EPS, down from the negative 12 cents last year, so they're bleeding even more from last year. And sales came in at 140 million. All right, they make way more money than Blink, right? 140 million, and that's on the top line, right? Up from 71 million year over year, and they reaffirmed full year 22 guidance. So it looks like they doubled up revenue year over year. Let's see what Plug is, or the market cap. Let's pull it up. I'm on Yahoo Finance, by the way. Their market cap, oh my God, $10 billion. Whew, $10 billion. So their price of sales is very high as well. So we got to dive deeper into that one. Let's see what Tattooed Chef reported. They just reported, and this one's free falling, guys. Oh my goodness, look at that, down 6% after the bell. Let's pull this up and see, are the numbers here? Let's see here. Yeah, the numbers are here. 72.1 million for the quarter in revenue, and they lost about 22 cents a share. I'm not sure what they lost in the previous quarter. Are their losses narrowing? Let's see here. Oh wow, their losses are actually widening, it looks like. They lost 10 cents 2 quarters ago, 17 cents the previous quarter, and like I said, they just lost about 22 cents in EPS, or their EPS is negative 22 cents for this quarter they just reported. And let's see, looks like they reiterated full year 22 outlook, which last quarter that they reported, and this goes to show how lightly covered Tattooed Chef is. Literally on the live news tab here on ThinkOrSwim, they have this quarter's report right here on the top, and last quarter's a couple lines down. That's when you know nobody reports on Tattooed Chef. They reported last quarter 17 cents in the red and sales of 52 million. So 52 million in sales last quarter. This quarter they did 72 million that just reported. So 20 million roughly increase quarter over quarter there, and they actually gave us full year 22 sales guidance last quarter, 280 to 285 million versus 282.99. So that's pretty much right in line with the estimates. So I got to look deeper into this, guys. We're not getting much information here on the live news tab about Tattooed Chef, but what you guys need to know is it is down 6 to 7% here after the bell, which is not that good considering the stock has been down a crap ton these past couple of months. We're talking now it's down officially 70-ish%. Let's see here. Yeah, about over 70%. Now after the bell, over 70% from that $25 high. So the last one, last but not least, you guys think I forgot about this one? Come on, guys. I did not forget about it. AMC. Let's see what AMC is doing. Not AMV, Stas. AMC. There we go. AMC went down 9% on the day today. And here after the bell, oh, look at that. It's actually moving up a little bit. It's up 40 cents after the bell, 2.83% to the upside, which is not bad. Let's see here. They did adjusted EPS of negative 52 cents, which beat the negative 63 cent estimate. So that pretty decent, I guess. And sales, 785.7 millianos versus 736.29 million estimated. So they double beat. There you go, guys. They double beat. Losses narrowed, revenue rises, and I'm sure they're crushing it year over year in terms of revenue because theaters were not operating, right? Way more people are going to theaters now, and that's kind of like what I said yesterday. Was that yesterday? Yeah, I'm pretty sure, right? NCLH, Norwegian Cruise Lines, if they do about 700, I forget the number, but if they report 700 million in revenue this quarter, and I think they report at some point this week, that is going to be growth of 23,000% year over year, which is crazy. Obviously, they're not doing that off of, following a solid year. They're doing that following a horrible year where cruises were pretty much not running, right? So that's kind of what we're seeing here with AMC. They're doing very well year over year, but still, you know what I mean, right? So it is down a lot. Even though it's running up a little bit after the bell, it's still down 75% from all-time highs. That little pump we had a couple weeks ago didn't hold at all. We went to $35. Now we're right back to $12. So just in the past couple of weeks, we're down 65%. And we're back under the moving averages. And we have a death cross here, 50 under the 180 SMA. So I'm not seeing how AMC is going to reverse. Or it's not showing any signs of a reversal quite yet. But like I say all the time, this stock with GameStop, along with GameStop and some other ones, these are like, you can't count them out. Sure, they might. Eventually, they're going to go back to their intrinsic value, which is a lot lower than where it is right now. But in the meantime, between now and then, which who knows when then is, but now in the meantime, this could easily make little runs. And by little, I mean 40%, 50%. It could catch fire on random days like it did a couple of weeks ago. But you guys got to realize, usually those runs are short-lived. So keep that in mind. And that goes with GameStop as well. I'm sure GameStop's under the moving averages, death cross. This might be going a lot lower, guys. So I guess that's it for this video. I hope you all enjoyed it. If you did, smash that like button, subscribe. Make sure to get your free money from Moomoo as well, up to 5 free stocks, each up to $3,500. All you got to do is use that link down below, deposit at least $100, and boom, you get your free money and up to 1 free share, potentially, of Twitter. And join my Patreon. You might as well join it if you want to. You get all my buys, sells, call-outs, all that good stuff. Also linked down below. And with that being said, cheers, guys. Let's go fight another day tomorrow in these markets. It's going to be interesting. I'll catch you all in the next video. Peace out.